7.2, SchoolCare notification of assessment for 24-25 school year. Amity, and Lisa and Dan.
So I'm going to turn it over to Lisa and Amity, and then I'll kind of come back at the end talking about the graphics and timelines. But Amity and Lisa will kind of tell you where we're at, the research we've done. We have done nothing wrong, but we do have a problem we need to solve, and I'll kind of turn it over to them.
Yeah, so if you've been following the news, it was a story on the Union Leader. It's been on MUR. To put out there first and foremost, this was nothing any of the districts who subscribe to SchoolCare saw coming. It was a surprise to all of us. It's an assessment. SchoolCare is our insurance provider, but they are an accessible risk pool, meaning all of their participants contribute to the risk pool that pays for the insurance coverage. And they basically sent the email out to everyone who is part of the pool on September 23rd with no warning that this was coming, and that by October 1st we would have a bill to know what our portion of the bill was, but we could expect it to be about 1.5 times what we pay monthly, which is about $1 million. So we were expecting it was going to be $1.5 million, which is significant. And then we got the bill, and it was actually $2,016,000. So basically what they did, this had to do with 2025 claims. They took what everybody contributed to the pool, that total amount for 2025. Then they factored what Londonderry had put into the pool, and they calculated that that was 6.7% of the pool. And they factored through their actuarial study, SchoolCare's, that they needed to do a $30 million assessment. So every district's or participant's part of the pool, the percentage is what percentage they would pay of the $30 million. So 6.7% was our portion. 6.7% of the $30 million is how they calculated our bill. As you can imagine, this went very surprising. It's a significant bill, so everybody called legal representation. The DOE hosted a meeting because we'd already turned in our audit and our reporting for our financials to the DOE and to our auditors, so we needed to talk with them. Lisa attended the SchoolCare town hall meeting where they basically reiterated what they had said in the memo. And then they reiterated to us that the assessment was a statutory and contractual obligation under RSA 5B, which has to do with accessible risk pools, and it's part of our membership participant agreement. The bill, our portion, is due by January 1st. After that, every month late will incur a 0.5% interest fee. For us, that's over $10,000 a month with about $60,000 total interest if we don't pay it until July. And then additionally, if we don't pay it by July, they will stop paying our claims for our employees, and we essentially lose coverage for our employees. You know, we talked to the auditors and our attorney about options. Did you want to talk? Did you want to speak to the options, or
Lisa's going to jump in next, or like go to the options?
Sure. I just wanted to add a couple things to what Amity said, and then I'll let Dan follow up with the options for payment of the assessment. So I just want to emphasize here that this assessment, as Amity said, was a surprise to all the participating members, districts, municipalities. It's not based on your claims experience. So this assessment of $2 million is not because Londonderry had higher claims than anyone else. It's just that we're one of the biggest entities that they cover. So it's based on our contributions, how many employees we have participating, how many covered lives. Yeah. Other than that, we all know that healthcare costs are going up. The healthcare landscape is constantly changing. So essentially, the easiest way to understand this is, you know, overall for the risk pool itself, all the participating entities, the medical and pharmacy claims came in higher for 2025 than the monies they had collected, which is essentially where we are. And because they are an assessable entity, they can levy these assessments. Think of it like a condo association. I hate to say that, but you know, when they have to levy assessments. So that's where we are. and I'll turn it back to Dan. Happy to answer any other questions.
Maybe Amity should explain the first option we have, then I'll do the other ones. How about that?
Yeah, so this is a little technical, but we have to have our financial report into the state. It's called the DOE 25. It also has an MS 25 that's connected to it. That is our financial report that is used to set the tax rate for Londonderry in December. So they spend all this time going through it. When the Department of Education had they also were surprised by this, and all of us, it was past the deadline of submitting our financials. We had already done our unassigned fund balance hearing, public hearing, all of that sort of stuff. So they said that if we intended to re-report our financials, with the understanding that these are 2025 bills, that they would allow us to take the DOE 25 back, restate our financials. This could be a special circumstance, and then we would need to recalculate what we would potentially have for fund balance and return to the taxpayer. The DOE was just telling us that we could resubmit our DOE if we planned to do that. And still of note, we voted, or the board voted, to retain $3.4 million into our unassigned fund balance, and you can't retain more than 5% of your net assessment, which is roughly between $3.6 and $3.7 million. So we're pretty near at our max as to what we can retain. So redoing any of this doesn't really necessarily get us much more than $200,000 to do any of that. If you did the special circumstance, then that can get a little more complicated, but of note for the taxpayers, that would mean it would change what amount we said we would return to them to recalculate the tax rate in December. Does that make sense? I know it's complicated. Any questions with any of that?
Any questions?
Then I tried to make a graphic to kind of explain where we're at and what we're proposing. So the headline is, we're gonna propose a solution by December. And the only reason we're gonna wait 2 months is, you know, here's what we see in front of us. Out of nowhere, the school care problem showed up. Not good. We spent a significant amount of time and effort on the district office plan, talking about full-day kindergarten, and we're about to start budgeting. I mean, technically, we already have. But in November, we'll know what 50% costs are for the district office plan. We'll start to get a reasonable sense of full-day kindergarten and our operating budget in general. So by December, we'll know all those costs, and I think by then we can make a good recommendation. Outside of what Amity just explained, which is kind of complicated, it is, the 4 basic pools of money we could use are our reserves, which we have about $3.5 million. Could we have a potential surplus from this year? Sure. We don't know yet. It's very early in the year. We'll see our first quarter report next time. But we could use surplus from this year towards this bill. We could build it into default for next year, and we could also ask employees to contribute to this. So those are 4 options. You know, as you look ahead, I mean, I think, you know, what we were trying to say with this timeline is, you know, the way they play out can be very different. And I'll kind of go over that on the next page too. But in terms of the district office plan, I think if we do end up using reserves as an option, I think there is time to replenish our reserves. You know, we always thought we had to use them for a broken roof or something like that. We didn't think a big healthcare bill would come out of nowhere, but these are what reserves are for. So we have time. So if you could flip to the next page. What I was trying to come up with was just, this is an example solution. I'm just showing the viability of any of these things. These are not real numbers. These are just, you know, examples. You know, so for an example, we could pay $1 million out of reserves. But the issue is every part of the bill we don't pay by January 1st, we're going to get charged interest. You know, so we would end up spending more money if we don't pay things by January 1st. So we can definitely, you know, see if we have surplus this year, and we can pay it before the end of the year, but we'd probably pay interest on those costs. Same thing for default. If we built it into next year's default, that would be a way to pay for it, but then we have to deal with interest. But an employee contribution we can kind of do right now also with reserves. So those are just some examples. You know, most likely what we think we're going to recommend, but, you know, again, we want we want more time to study this. We want to see all of our costs come in around the district office, around kindergarten, around the operating budget in general, and just kind of see where we're at. But I think by December, we'll make a recommendation. You know, we could do that at the first or second budget meeting in December, so the school board has plenty of time to think about it. And then we would put something in motion to hopefully, you know, kind of resolve this problem and move ahead. I mean, I'm sure there's a ton of questions, so.
I would just like
Yep.
to add that if we are not going to do option one, we need to rule that out tonight,
Yeah.
because if we delay that, it will delay the tax rate setting. So if we don't plan in the next couple of weeks to look at the DOE 25 and redo our audit and financials, that would be something to rule out tonight, and then it would leave the other options on the table. In a nutshell, for the taxpayer to understand, if we leave it as is, we are not taking back any of the money that we have said we would return to them. And then any surplus we tried to get in this year's budget would be from a more careful watching of how we're spending the money this year.
Yep. Okay. Any questions? All right. Let me start. It's been a busy couple of days since this landed on our plate early or mid last week. The efforts that this district has made to start moving forward with projects and things that are needed to help our community with some tax relief moving forward, coming in with a flat budget for this school year, and worked extremely hard on getting grants that we were able to return, you know, so much tax dollars to our community with that vote of a couple weeks ago of the 1.36 million to return for the December tax bill. You know, it's very upsetting. I was on the phone today with Sherm Packard, the Speaker of the House, Sharon Carson, the President of the Senate, and then had a conference call with Sherm Packard and Dave Scanlon, Secretary Treasurer. And I expressed the concerns of how the school districts have been held hostage here. This started last year. They knew it was coming by the explanation at the Concord School Board last Monday night, and explained they started seeing these deficiencies back in October of last year and into the spring of 25, and then the assessments came in at the end of the year, and then they decided to go with this one-time assessment. Nobody has seen an audited report, nobody has seen any financial reports, and I have a problem with that. So this is words from SchoolCare to the districts. Out of the blue, at the end of the first quarter of a school year. Budgeting takes place November, December, voting in March for July 1 allocations. This is holding school districts hostage. They've got to pay it, or their employees aren't covered. It's not fair. That's why I put a call into our representatives and asked them to look into this, and they got Mr. Scanlon on the phone, which oversees the state insurance. And my last call at about 5:15 is there's a meeting being set up next week with all these people in SchoolCare up at Concord. I will let you guys know. And I plan on attending, and I had a long, drawn-out conversation with Mr. Scanlon on how we operate here and how other school districts, and a lot of the SB2s don't have any fund balance, so they're in really bad shape and trying to find this money. So I would say I'm glad we've got some time to do some research. My feeling is SchoolCare should have met with each district individually, set up a plan to pay this money and work through their deficiencies that they seen coming, and not hold us hostage that you have till January 1 to either tell us how you're gonna pay, or we stop covering your bills in April. So that's my take of the last week and a half, and made some headway today. I don't know what'll come out of the meeting, but I don't think it's a time to take our foot off the gas and not pursue this, to maybe come up with a business plan that works for our district and other districts, because I feel bad for them as well. And I had a conversation with the chairman of SAU 49, Brody, of the Governor Wentworth District today. They had their meeting last night and sent a letter to SchoolCare asking for a lot of this information that I'll share with my colleagues and with you, Dan and Amity and Lisa. And they basically asked for this information from SchoolCare. So, and they host 9 towns up there, and they owe 1.6 million. And they're in SB 2, no fund balance. So I think a lot of school boards are talking, trying to find a solution and get into, hopefully next week, meeting with SchoolCare and the Secretary of State. We can come to a better resolution moving forward. So hopefully that will be a worthwhile meeting to attend. I don't know what'll come out of it, but I will update you once I get that date.
No, I mean, I think your frustrations are warranted. I
Yeah.
think when we got this email, we all said, "What? Is this for real?"
Yeah.
Because I think what we've seen over the last couple of years is the health trust school districts were getting just gigantic raises in costs every year, and we felt pretty good about SchoolCare because we know they're coming in lower, but then here are the costs.
Right.
You know, I don't know what happened. I don't know how they got to this place, but if the costs were higher in the last 2 years, give us those costs, we can build into our budget so we're ready for these things. And I think just the process of how they went about this, whole different story if we know this in July
Mm-hmm.
versus September,
Absolutely.
you know, for the tax rate, for everything else, you know?
Yeah.
So, yeah, the process and how they handled this was terrible. Just in general, how we got here was terrible. So we understand your frustration. We're frustrated too.
Yeah, like I said, the board has worked hard, you guys have worked hard, the administration, to bring this district, you know, into a good place. And we're moving forward with all these great things for our students in our community. And then we get this thrown on us at the 11th hour. It's not the way to operate, like I told the Secretary of State. I said, this is not the way New Hampshire's supposed to operate business. How can you allow this? You know, so I'm hoping some good comes out of the meeting, and we'll go from there. But
The one-time, they've been calling it a one-time reassessment to bring up their reserves back up to $30 million. And I know we're figuring this out on the fly because the information hasn't really been out there. I mean, had to go and watch 40 minutes of a Concord school board meeting just to get the information from this SchoolCare rep who didn't come here, didn't share it with us, despite us having a $2 million bill thrown at us that they expected us to pay on receipt. But they're gracious enough to give us a 3-month window. So that being said, I plan on digging into this further with you two. But as far as that $30 million figure, have they talked about where that came from?
I think they just.
Why isn't it 20 million?
So I think they said in one of their, I think it was at the Concord School Board segment, that they really were their actuarial study showed that it really should be 45 million. And I think they said that they were gonna start with 30, and that an assessment is separate from the rates, so they might try and build in some of
they're gonna jack the
the,
rates
yes.
up too.
So we haven't gotten what our rate increase will be for the year yet either. So I think they were just trying to get where they need to be and make up for it in some of the rate increases.
anyone else?
So one of the big things that we have to decide
Yep.
is on the 1.3
Yep.
that we already voted to give that back to the taxpayers. Personally, I'm not of the mindset that I want to go back on that. I know I'm one of 5 here. I don't want to do that to the taxpayers. I think we can work through figuring this out.
I agree.
You
And I
agree?
don't wanna put it on the employees either.
No.
I know you guys, we need time to talk about it and think about it, but
Yeah. We got a long process here
need
over
to
the
keep
next
our people
couple of
happy.
months, so.
But
we
if
just-
that's what we need to decide tonight,
Correct.
that's
You-
where I
you
stand
do
on that
about-
particular
yep.
issue.
Correct, yep,
Agreed.
yeah.
agreed,
Yeah, I agree. I don't want to go back and revisit that.
yeah. Sounds like consensus is move forward, leave
Okay.
everything with the DRA, and everything's fine. The
Okay.
1.36
So that
goes
it
back.
won't, yep,
Our taxpayers deserve it, and we've worked hard to get it back to them, and we do have reserves that we'll work through over the next several months with
And-
the superintendent and yourself, and, you
Yep.
know, figure this out, and let's see what happens with the meetings over the next couple of months
yep.
and that, so.
And our DOE 25 and our DRA documents have already been accepted and approved. So if we
Okay.
had gone another route, they would have had to have been
No,
recalculated. So there should be no
This-
delaying the tax rate being set then.
I mean, this is nothing that anyone in this room or this town has brought on. It's the world of, the medical world out there it's getting scary. So we've got to just watch it moving forward. It's happening all over the country, so. But yeah, you're all set with that, and
Okay.
we'll keep you updated, let you know when the meeting is. I'll let all of you guys know too, once I get that date, and keep you posted on the outcome, and hopefully they'll work with each school district that has different needs and different services, so they can afford to educate their kids and keep their staff insured. So, appreciate it.
Thank you.
Thank you.